All right, listen up. If you're a UK landlord, or maybe you're even just thinking about becoming one, the next few minutes could literally save you thousands of pounds. The 2025 budget has just dropped, and today we're going to break down exactly what it means for you. This whole analysis comes from a special briefing put together by the experts over at My Tax Accountant, and trust me, a storm is gathering that is about to completely reshape the entire rental landscape.
Seriously, the rule book is being completely rewritten. Strategies that were profitable just yesterday could easily become financial drains tomorrow. So let's get you ahead of the curve.
And just so you know, this analysis comes directly from the team at My Tax Accountant. They have been meticulously crunching the numbers from today's budget announcement, and they've laid out the real-world impact so we can all understand what's really coming.
So, here's our roadmap through this storm. First, we'll look at this new era for landlords. Then, we'll dive right into the direct tax hit from the 2025 budget. After that, we'll tackle the rising costs of just staying compliant and meeting new green standards. And finally, and this is the important part, we'll cover the essential steps you need to be taking right now.
A perfect storm. You know, that's genuinely the best way to describe what's on the horizon. It's not just one thing, it's this combination of tax hikes, brand new costs, and much tighter regulations all coming together at the same time. And look, this isn't some far-off problem you can worry about later. Take a look at this timeline. Phase 1 of the Renters' Rights Act, that kicks in from May 2026. The new tax rates, they apply from April 2027, and that proposed energy efficiency deadline is 2030. These changes are right around the corner. Okay, so the single biggest regulatory shift is this Renters' Rights Act. The headline feature, the one everyone's talking about, is the end of Section 21. You probably know it as no-fault evictions. This means landlords are going to need a valid legal reason to regain possession of their property, and that fundamentally changes the whole dynamic of tenancy agreements.
This quote here from Generation Rent really captures the spirit behind all these changes. There's a major government push for more transparency and accountability in the private rental sector, and these new laws are how they're planning to deliver it.
Now for the big one, the direct tax hit from the 2025 budget. This is a huge structural overhaul of how your property income is taxed, and it's going to affect your bottom line. No doubt about it. So here's the core concept. You really need to get your head around this. From April 2027, your rental income won't be lumped in with your salary or your trading profits anymore. It's being carved out into its very own tax category, and it's coming with its own set of rules and, crucially, its own tax rates. This slide shows the new pecking order for how your income is going to be taxed. Your personal allowance must now be used against your main job income first. Only after that is your property income taxed. This seems like a small tweak, but stay with me. This one simple change has massive implications for your final tax bill.
And here they are, the new property tax rates themselves. It's a 2% increase right across the board. The basic rate goes up to 22%, the higher rate to 42%, and the additional rate all the way up to 47%. The takeaway here is simple. No landlord is unaffected.
Okay, pro tip time. For anyone out there with a mortgage on their rental property, this is where things get even more complicated. The infamous Section 24 rules, the ones that changed how we treat mortgage interest, they're about to bite even harder.
Now, at first glance, this looks like good news. The tax credit for your mortgage finance costs is going up from 20% to 22%. But don't be fooled. Because of the way Section 24 works, higher-rate taxpayers are still going to see their overall tax bill increase, and pretty significantly, too.
Let's make this real. Let's meet Alex. He's a freelance web developer in London, earning £50,000 a year. He's also got a rental property that brings in £10,000 in profit, but he has mortgage interest costs of $8,000. Now, in the old days, his taxable profit was just $2,000. That's not how it works anymore.
Because of those Section 24 rules, Alex's entire £10,000 rental income gets added to his freelance earnings. That pushes him straight into the higher rate tax bracket. He only gets a tax credit on his interest. So what's the bottom line? Alex would pay about £2,400 more in tax than if he owned that same property through a limited company. That's not all. Here's where most people go wrong. The tax hike is only part of the story.
And that brings us to our next section, because the financial pressure isn't just coming from HMRC. A whole raft of new compliance measures are introducing new mandatory annual fees for every single landlord.
So first up, there's the new National Landlord Database. To be on this register, which is mandatory, you'll be looking at an estimated annual fee of up to £75 for every single property you own.
And then there's the new mandatory redress scheme.
The initial government estimate was a pretty modest £6 per property. But industry experts are already warning that because of operational costs, the final figure is going to be significantly higher.
So why does this all matter so much? Well, this new database will make it way easier for local councils to enforce all the regulations. So non-compliance, whether that's with safety certificates or the new energy standards, could land you with a fine of up to £5,000 per property.
This quote from the National Residential Landlords Association, the NRLA, it just sums up the industry's feeling perfectly. I mean, of course, everyone supports targeting rogue landlords, but there's a real concern here that all these administrative and financial burdens are just penalizing the vast majority of good landlords out there.
So on top of tax and fees, there's a third major cost coming down the line: capital expenditure for green upgrades. And for many landlords, this is going to feel like a significant and expensive renovation project.
Right now, as things stand, every privately rented property in the UK has to have an Energy Performance Certificate, or EPC, with a rating of at least E. That's been the law for a few years now.
But this chart really shows the scale of the challenge ahead. As you can see, only about 48% of rental properties currently meet the proposed future standard. That means the other 52%, that's all the properties rated D, E, F, or G, are all going to need upgrading.
Because the proposal that's on the table is to raise that minimum standard from E all the way to C by 2030. That is a huge leap. So you've got to ask yourself, honestly, is your property portfolio ready for this?
Because if it's not, the costs could be pretty substantial. The estimated average cost for a landlord to upgrade just one property from a D or an E rating to the required C standard is a hefty £6,800.
Now, did you know this? For the current E rating, there's a £3,500 cost cap. But, and this is a critical uncertainty, the government has not confirmed if any cap at all will apply to the much more expensive upgrades needed to get to a C. This means your potential cost could be completely uncapped.
Okay, so with this storm of tax changes, new fees, and potential renovation costs, it's really easy to feel overwhelmed. I get it, but you can prepare. So let's talk about how you can navigate these challenges and protect your investment.
So let's just quickly recap the storm we've been talking about. We've got higher and separate property tax rates, the worsening impact of Section 24, new annual fees for databases and redress schemes, potentially huge costs for those EPC upgrades, and a whole new layer of legal complexity on top of it all. It is a lot to handle.
And this all leads us to the most important question of all, right? Faced with all of this, how can you, as a current or a future landlord, navigate this brand new landscape and make sure your investment doesn't just stay compliant, but actually stays profitable?
Now, it's really important that we say this briefing is for general guidance. The world of tax is incredibly complex, and everyone's individual circumstances are different, so this information shouldn't be used on its own to make financial decisions.
In this new, more complex environment, getting professional advice is no longer just a nice to have. It's absolutely essential. To navigate these changes with any kind of confidence and to structure your investments in the most efficient way possible, you really must consult a tax expert.
The team at My Tax Accountant, the people who developed this whole analysis, are experts in this exact field. You can reach them directly for a consultation using the details you see on your screen right now. Prepare now and protect your investment for the future.